We got 3 clues on crude oil. And these 3 clues on crude made it very easy for us to plan our attack. We call these price structures. And the first price structure we saw was an outside day, right? We are above the highs from Monday. Now, what does an outside day tell me? An outside day says, if we keep going higher, I'm buying pullbacks, right? The sentiment, the opinion of value is changed from one day to the next. So on Monday, they saw value from 82.24 down to 77.11. Well, something changed this morning. Maybe it was that supposedly good news about the European mess overnight. Maybe it was consumer confidence. Whatever it was, we really don't care what it is. We know if we're above that previous high of day, the bulls are in charge, the buyers are in charge. But we called this a transition. What does a transition mean? A transition means it's just above those previous highs. And so what that tells me is that at any moment, this thing could come tumbling right back down in. So the outside day transition says, if we're going higher, I'm buying pullbacks. It also says, be aware that if we can't break above that 82.24, and if we tumble right back down in, that's a very big bearish clue, and the bears are now in charge. My second clue was this bear price channel. And this was the variable that really put us a bias to the short side today. What does a bear channel tell me to do? A bear channel says, as price rises, sell. A bear channel says, if price makes a new lower low, I'm selling retracements to get back down into that bear channel. A bear channel says, be careful trying to sell the lows of a bear channel. Okay, exactly the opposite. Be careful buying the highs of a bull channel. And sell the highs of the channel and sell the resistance above the highs of the channel. So the bear channel here tells us, if we don't see some real strong price action, this thing is going to tumble down off the highs of that bear channel. Sell the highs of the bear channel. It also told us if price rises up, for us to look to sell and bring it right back down into that bear channel. So the bear channel gives us a directional bias to the short side. As price rises, I'm looking to sell. As price falls, I'm selling retracements with new lower lows. And then the third clue. Now this is what made us real stingy about that short side. Okay, the bearish channel told us the bias to the short side. But the price wedge, okay, this price wedge right here, that price wedge is what told us don't believe those buyers. Okay, what does a price wedge say? Expect a fake out breakout. So when I see a price wedge and then we break out of a wedge, and this is from previous experience, it's almost too easy usually. It comes right back down to that wedge. So the price wedge says expect fake out breakouts. The bear channel says expect price when it rises to sell off and come back down. The outside day transition says if we go higher, we'll be buying pullbacks. If we go lower, right, below the previous high of day, we'll be selling off. Bears are in charge. Now, what happened today? Well, we began our day this morning with that simple plan, and that was using my bear channel, using my price wedge. I'm going to look to sell as price rises. Follow that plan, and your plan will set you free. We begin here at 7:45, and we go right to the high of day. We test the high of day. I'm right at the high of that channel, and I'm going to sell here at 750 for 36 ticks of profit. Now, as you can see, there's no pattern on my 13 range chart. This is my 13 range chart, by the way. There's no pattern there. Okay, the actual two-step pattern would come in right there, right? That would be your two-step pattern right there. So where do I get into that trade for 36 ticks of profit? Follow me up top here. At 7:45, again, this is my 4 range chart, a much faster time frame. You can see there's my high of day right there. We go up, we break the high of day. There's my channel highs overhead. We're going to come down, swing low, bounce back up, break below that swing low, and just like that at 7:50, we got 36 ticks of profit. Now, sometimes this can be the worst thing to happen on a potentially sloppy day because we're looking at it going, right, I'll just kick back, relax, and we'll just let the money just pile in here today. We're going to keep selling those highs. So our confidence is pretty high at this point at 7:50 this morning.